Welcome to another episode of Random Crypto. Let's start off with our disclaimer. I am not a financial advisor, and I'm not offering any form of financial advice. Everything that I say is just my personal opinion. You should always do your own research before making any financial risk. Any investing is a risk, and nothing is guaranteed. How's everyone doing? In this video, we're going to go over Crypto20. Crypto20, currently right now on CoinMarketCap, is around 66 cents. Token is ranked 166. Hit a high point, and when it first came out on January 22nd, it's like $3.86. Current markets. Let's look at the project. First, tokenized crypto index fund. So what I've gotten is that you're going to buy the Crypto20 token, and somehow that's going to trade itself amongst the top 20 tokens to keep your value. Let's watch the video and see how it's going to do that.
Don't look for the needle in the haystack. Just buy the haystack. John C. Bogle, inventor of the index fund. Blockchain technology has grown exponentially since its creation in 2009. The total cryptocurrency market cap obtained an average of $500 billion in 2018. Should you invest? High returns come with high risk and extreme volatility. Bitcoin's market share has dropped. Now altcoins are the majority. There are literally thousands of coins to choose from. So how can one invest in cryptocurrency effectively? Crypto20, the first tokenized crypto-only index fund. Crypto20 autonomously tracks the top 20 cryptocurrencies, similar to the S&P 500, which tracks the top 500 US companies. The top 20 coins change. So does Crypto20's holdings, mitigating risk and volatility. Index funds with automated trading offer much lower fees than managed funds. They have consistently beaten actively managed funds since their inception and grew by $375 billion, while actively managed funds shrunk by $308 billion in the same year. So how do you buy the cryptocurrency index? Introducing C20, the token of the Crypto20 fund. Tokens represent an investor's share of the fund. Investors are free to sell or exchange their tokens at any time. There are no exit, broker, or advice fees, with full blockchain transparency, powered by data science, and in a proven fund structure. Instantly owning a diverse cryptocurrency portfolio is now as easy as holding a single token. One token that is linked directly to 20 underlying crypto assets via the smart contract. Invest in cryptocurrency with peace of mind. Tokens available now on various exchanges.
So that's an interesting project. Kind of sounds like the coin is going to act like a trading bot for you amongst the top 20 tokens and coins. It's autonomous, so it's automatic. Index fund performance, like I mentioned, it's going to go through the top 20. You can click here to learn more. Ease and simplicity, because the token is doing everything for you. They were kind of asked the question, why are they doing this project when, us as currency holders ourselves can go on exchanges and trade it amongst ourselves if we wanted to. Their answer was they like the current business models but feel they could do it better. They've taken out some things that they didn't like and have kept the things that they have. So what they did like was 24/7 trading. They have the lowest fees. It's autonomous, powered by data science, track the index, and blockchain transparency. Everyone loves transparency. Here's some of the coding behind the token. Their roadmap, which is pretty much completed already. They're right here. Public launch on exchange, data collection, regular fund operation. What I just got out of that is that whatever money that they have left is used for research and development. Once again, I'm not a financial advisor, so please don't use this video to invest this or think that I'm offering any kind of investment advice, but I can only guess that right here is they're saying that if you were to invest $10,000 with them, this is kind of what your projections would have been like last year. Here's pretty much another chart where you can put in X amount of dollars and do a timeline, and you'd get whatever money you would have invested with or an outcome. Here's the team, advisors, legal, their partners, some information on the ICO, which is no longer needed, and some facts, which is always great. going to leave on some news. A secret message has been found in Bitcoin's Genesis block. So they found this gibberish in the code, and it was pretty much really simple to decode. They just had to reverse it. The Times, 3 January 2009, Chancellor on brink of second bailout for banks. So the significance behind this is you got to understand why the bailouts even came about. And that all started off with the financial institutions. So I'm going to try to explain this as best as possible. So it all starts off with you, actually, with us as people. We go to a job, we earn our money, we put our paycheck in these banks. The bank is supposed to hold our money and use it as needed to an extent. So when you go for a loan, your loan is actually a portion of everybody's money. So the banks can loan out a little bit of your money, but it's only supposed to use a certain amount. But the banks, they were unregulated at the time, or the financial institutions, and they kind of just went crazy with it. So say a person wanted to go buy a house. They would go to a financial institution, do this loan paperwork, and the banks would give out your money more than the percentage they should be on a gamble that the person they were providing these loans to were going to pay on time and give them back the money. The bank would make money, and your money would be fine. But what happened was people weren't able to pay their loans back. Banks weren't able to give people's money back that they've earned. So say I had $200 in the bank and it's all I had, but because the bank loaned out, say half of it, they loaned out $100 because somebody wanted to buy a house or a car or something. When I went to get my $200, they only have $100 left, so I can't get out my $200. The government's answer to that, because the bills were so high, was, well, let's just print out more money. We're going to print out more money that way and give it to the banks so the banks can pay the people back the debts that they owe, which caused inflation. And why they thought this was a good idea, because it's just they're paying off of a debt with more debt. I don't understand why they thought that was a good idea. And they're saying in this article that Nakamoto was providing a solution or an alternative to this when this happens again, so it doesn't happen again, honestly. Because you can't print out more Bitcoin. You can't create more Bitcoin. There's only 21 million Bitcoin out in the world. Once that's gone, it's gone. You can't fabricate more because you needed to, because you overspent. And because the bank or the financial institution is too big to fail, the government's just going to print out more Bitcoin. It can't. The banks of the financial institutions honestly should have failed. That's just my personal take on it. I hope I didn't ruin everybody or bore everybody with this. I hope I explained the actual problem as far as I understand it as. Thanks for watching, guys. Talk to y'all next time.